Good afternoon, beautiful people. Welcome back to Young Money Investing. It is Sunday afternoon, so it's time for my weekly market prep, where I go over some of the major US stock markets to kind of help establish some trend and some market structure so that you can make better trading decisions and ultimately make more money. Now, real quick, if you appreciate this content, go down, click that subscribe button. I am so close to 100 subscribers. So go down, click that subscribe button, and let's go ahead and jump into the charts. All right, we'll start off here looking at a daily chart, looking at the US dollar, the DXY. You can see that we were kind of trapped in this little channel right here for a while since Wednesday, pretty much just about a month ago, since about Wednesday, the 12th of April. Thursday and Friday of this past week, Thursday the 11th and Friday the 12th of May, we got some big green candles. On Thursday, we broke through the 20-day moving average, which has kind of been forcing price action lower and lower. And then on Friday, we got a Maribozu candle through the 50-day moving average. If you don't know what a Maribozu candle is, it's pretty much just a candle that closes at the high or the low. So there's really no wick on the top or the bottom. It's a very strong directional candle. And you can see, let's see here, the high was 102.71 and the close was 102.70. So very close there. Maribozu candle pushing up. Looks like we are going to get a move back into this green zone. Are we going to come all the way up to the top and see an interaction with the pink line, the 200-day moving average? Probably not this week, but in subsequent weeks, I would kind of keep an eye out on that. Based off of the strength of this move, I don't really expect resistance right at the bottom. Maybe moving up a little bit. Maybe about 104.77, you might kind of see some resistance start to creep in, and then eventually towards the top of this channel. And again, like I mentioned, the interaction with the 200-day moving average. So we'll jump over to the NASDAQ now. NASDAQ still just kind of going sideways a little bit. Not really any crazy moves happening. We are kind of creeping out of this consolidation channel. We also have this slight trend line intact right here, but I'd like to see at least one more retest, possibly in confluence with the 20-day moving average, before you see another move higher. One thing to keep in mind is we have the dollar moving higher, which generally means stocks should move lower. So keep an eye out for something like that. You didn't really see that, even though you got those big green candles on the DXY. You didn't really see a rejection on the NASDAQ. It just kind of crept higher pretty much all this week. If we look at the weekly chart, you can see very small green candle here, only about 0.5% on the week. So, you know, this could still go either way. I wouldn't even call this a confirmed breakout yet. This could very easily fall back into the channel and see more sideways action. Or, you know, it could fall down to here, down to the bottom of the channel, down to the 50-day moving average, down to the 200-day moving average. Even if we zoom way out, all the way down to this support line at about 10,715. That would obviously take a couple weeks to see that move materialize, but like I said, not really a confirmed breakout. I still kind of consider this sideways action with a slight bullish tilt. So, you know, don't do anything crazy. Don't be expecting any gigantic moves in either direction. Let's jump over to the Russell 2000. The Russell is still trapped within this consolidation channel, as you can see. We have pretty much been trapped in it since Friday, March 10th. Since that date, it's pretty much just been sideways action. You can see here we are getting forced lower by the 20-day moving average, and by the 50-day moving average. We got a rejection off of that on Wednesday, May 10th. And the price action is very close to the support line at 1734. So what do I think is going to happen this week? I think that we are either going to break above these two moving averages, and we'll see a move in short order back up to this resistance line at 1923, or I think the moving averages are going to force price action below the support line down to our next support line, which is at 1655. Now, I'm not really sure which way this is going to go quite yet. You might see the 50 cross over the 20-day moving average. You might just see price action go sideways a little bit, and then you see a large move either way. But if we go ahead and take our measurement tool here, you can see a move back up to 1923 would be about 7%. And if we move back down to 1655, that would take you for about 4.5%. So either way, I think that very soon, probably sometime this week, it's going to be pretty decent trading opportunities on the Russell 2000. The Russell is capable of moving, like you see here, very sharp move down. You see this 1, 2, 3 move up, very, very solid move up. And so, I think that we are going to see probably a larger move like that in the near future. Whether it's up or down, I really couldn't tell you precisely which direction it's going to go. So keep an eye on price action, keep an eye on these moving averages, and keep an eye on that line at 1735. Let's jump over to the Dow Jones. Dow Jones, kind of very similar story to our other indexes, mostly sideways action, as you can see right about here. Pretty much all sideways action since about the beginning of April. We did get a rejection off our 20-day moving average. We're catching support along the 50-day moving average. Similar to the Russell, I'm not sure which direction this is going. Whether it goes up, back up to 34,345, or down to 32,580, or even lower to 31,745. I'm not exactly sure yet, but when you zoom out to the weekly time frame, you can see obviously a lot of sideways action. A lot of sideways action happening, apart from this kind of little break here and then the move back up, which happened towards the beginning of March. Other than that, really not a whole lot happening. Going back to the daily time frame, it's kind of hard to tell. We do have the 200-day moving average below us, so if price action were to kind of fall below and see a move like this, we might catch some support on the 200-day moving average. You might just see that come down even as far as, like I mentioned, that 31,745 level. It's really hard to tell. Keep in mind that the dollar is pumping at this moment in time, which does give me a slight bearish bias towards most assets and equities. So I would kind of expect this to fall downwards more than upwards as long as the dollar continues to climb. Now, we've looked at our stock markets, we got that out of the way. Let's go ahead and take a look at my trade of the week. And this week we are looking at CTI Biopharmaceutical Corporation. The ticker symbol is CTIC. Super simple setup here. You see we had earnings on Thursday, May 11th. Huge pump up. See, we had an 85% pump, currently sitting on a gigantic gap, which is about an 82% gap. The interesting here is we actually gapped up the day before earnings came out. We gapped up on Tuesday, and then earnings came out on Wednesday. We gapped up on Wednesday, earnings came out on Thursday. There's really no cause for this when you take a look here. They lost slightly less money than they were expected to lose, about 12% less. And yes, they made about 1% more revenue than they were expecting to make. But overall, is that a reason for an 85% gap up? No, absolutely not. Even when you zoom out here to the weekly time frame, you can see massive pump. There's just really no reason for it. Back over here we had, 184% pump, 66% pump. I just don't see this being sustained. So I think that is going to come back down and kind of close the gap here. We do have some support at about $4, but realistically, I just feel like this has to come back down. There's no reason for that gap. There's no fundamental reason. There's no technical reason. There's just no reason for that gap. So I would short this. I'm not exactly sure where you would put your stop loss. It's kind of hard to find one because there's really no levels when you look to the left. So if we go ahead and take a short position here, we'll put it in about there. Take this all the way down to close the gap. And let's see here. Stop is about 99 cents above, so that's about 11%. And then you're looking to take to the downside, about 44%. So you're risking $1. You're looking to make about, what is that? $4. The risk to reward here is about 407. Really solid risk to reward here. I think gap fills are personally one of my favorite opportunities to trade. So, I think the risk reward here is really solid. I want to give this a little wiggle room in case you do see kind of a sweep up, but I really don't think this will go too much higher before you see the rotation back down to, some more reasonable valuation at about $5 or so. So that's it. That's the trade of the week. Remember to be smart with your money, use a stop loss, and always be extra careful when you're shorting because the loss is theoretically unlimited. That's it for me. Thank you guys so much for watching. I appreciate each and every single one of you. If you guys appreciate this content, go down, smash that like button, and I will see you all next time. Peace out, homies.